Good morning, everyone. Oh, hang on. Hang on there. There we go. Mic check, screen check. Now we're back in line. Welcome, welcome, welcome. Yeah, it looks like everything's working correctly here. Good, good, good. All right. Right? Yeah. Sorry, I don't know the micro. It's like the decibels. Oh yeah, okay, that's why. Yep, decimals were set wrong. All right, decibels rather. All right, there we go. Welcome, welcome. Good morning, SSFTG family. I hope you all had a chance to rest up, get ready for the day ahead, all that fun stuff. As per the usual, make sure to read through the morning prep PDF on the right side of the screen. Very important to understand everything that is inside there. Just a quick note for you all before we jump on in today, if you're watching on the YouTube side of things. The stream does have between a 5 and 30 second delay, which will definitely impact the timeliness of what I may be talking about at any given moment. Good morning. Hey, Steven, how's it going? Everybody else, welcome, welcome, welcome. Running a little bit behind schedule. My daughter requested Dad's pancakes. I have my own like recipe. It's a thing. But how do you say no to your daughter? You know, I mean, yeah, fine. I got like 15 minutes. I think I can whip out some pancakes. All right. So just before we jump on in, I just want to take a second, like we do every day, to thank all of our new members, subscribers, Academy students, VIPs, everyone in between. Thank you all so much for the support. I'm super excited to have you all on board. Welcome to the SSFTG family. If you aren't a member yet, you do have a few different options available to you to check out if you're looking to further your trading education and career. One of the easiest ways is right here on YouTube. You can join. You can check out the join button below the stream, and that will get you access to the extended hours room, which is where we continue the morning room with a little bit less delay to the end of the session. YouTube members also have access to the communities area where I post all kinds of different chart setups, stock charts, analytics, and more. Of course, every member gains access to the Discord chat server and to get the awesome badge next to your name here on YouTube to show your support. The best part is it's $5 a month, so you skip a coffee and, you know, you're pretty much set, nice and solid. Gotta love it. If you want to take a massive step further forward, though, in understanding our trading approach and what it is that we're doing here every day in the room, look no further than the Day Trading Academy. You can find that over on SSFTG. And this is where you can learn how we do everything. But listen, this isn't a small little PDF guide that you're going to finish in an afternoon, all right? Yes, we do have a quick start course, but to really dig in like the Academy does, you're looking at about 19 plus hours of video course material, which will be growing soon with the introduction of Unit 4. Along with the course, we have homework, study guides along the way, and all of that fun stuff to really make sure that you're understanding what's going on while you navigate the course, which I review personally. And you get the DTA upgrade discount, which is pretty awesome too. Then there's the top floor, the executive suite. That's where you're going to find all the VIPs. And VIPs have permanent access to everything that is SSFTG. The Day Trading Academy, private Discord chat, future updates, new strategies, monthly webinars, one-on-one access, and everything else. It all comes as part of the package. VIPs gain access to the fully dedicated, non-delayed stream to the entire session, meaning that they are on the fastest connection you can get without any delays from start to finish. So whether you're here for the very first time, or you are one of the VIP vets over on the dedicated stream, welcome. I'm glad to have you trading alongside of me today, analyzing these crazy markets of ours. Let's take a look at some news, take a look at some charts, all that fun stuff. Let's jump in and see what is waiting for us today. Don't forget to grab your morning DP levels. Those are posted for you this morning on the major 7 markets that we take a look at. NASDAQ, S&P, Gold, Crude, Euro, Bitcoin, and Ethereum. It's a race every time, and this time I tied my shoes. As far as the news is concerned, yesterday was the big one with FOMC. Today we have GDP at 8:30 that came out earlier and kind of shoved the markets around a little bit, and we'll get into that in a second. But for the most part, not a whole lot's going on here. We also had initial jobless claims at 8:30 that was forecasted at 380,000, and just so you know, the GDP was forecasted at 8.5. At 10 o'clock, which is the next news announcement that we're going to have to keep our eyes open for, that's the pending home sales month over month for June. The forecast for that is 0.3%. So keep that in mind. We do have some news at 10 o'clock to keep our eyes on. Get that out of the way. Let's take a look at what's going on. As far as the S&P is concerned, we've got, I mean, you know, this really looks like we've got some serious issues for sellers if they're trying to get anything going. If we put a POC from the bottom all the way to the top, just the entire thing to see what's going on, we can see what just took place in over the past couple days. We have this POC which is anchored at 95.75, and it's been kind of pinging around up and down a little bit. But for the most part, the market is staying underneath, and then all of a sudden now we're back up above it. We are spending a good amount of time on both sides of it. And if the market is going to break higher, having a middle-weighted POC, and I say middle-weighted because usually when you have a top-weighted POC that breaks out, it usually ends up being the middle of a move. And that means that there is some serious upward potential here for the S&P if it wants to break out to the upside. Now, if we're looking back on a bigger picture here and kind of consider what's going on from a zoomed out perspective, really this big pullback that we had a few days ago, that was a really nice dip back to some previous structured zones. We talk about a lot of POCs, PVC, a lot of POCs back here that the market reached out to, a lot of double value pullbacks, actually even further than double value pullbacks, a lot of dipping going on. But if we take a look back in this bigger picture here, what do we have going on from here, from this perspective? The last time we had a fresh low was back in kind of middle of June there. So if we go back to that area inside there, the first rally up was like there was no pullback whatsoever, right? So the fact that we have no pullback at all, usually reversals happen off like L3s at least. This one took off in L1. It's not very common, but it does happen, I guess. With a continuation up, we've got more L1s all the way up. We finally had this pullback back down to L3, potentially L4, depending on how you draw it or how aggressively you want to mark it up. For me, it didn't actually test it, so this would be a confirmed L3. And we can further reconfirm the L3 with these wicks back here, demonstrating support off of it. So as far as things are concerned, we have an L3 rotation that just broke above the highs. Well, when we have a breakout L3 out of confusion and a strong breakout above the top, where do you think the market's going to pull back to? It's a pattern. It's right out of the textbooks, right? You've got your typical pattern setup with a BL3 that's pulling back, and it's already bounced. That was the pullback a couple days ago on the 27th. Yesterday, we didn't do much of anything. It really didn't go up very much. It didn't go down very much. Keep in mind, it was a huge range on the NASDAQ, but on the S&P, it really didn't do a whole lot. And given that context, this could easily be pent-up aggression before a final push back to the upside. And if that final push ends up being too strong, then this L1 could turn into a new trend like we were talking about, where the POC ends up in the middle. There's a lot of context coming into today suggesting that it should be relatively bullish, all things considered. Looking at gold, speaking of bullish, we are way outside of all of the DPs, and the primary reason for that is because the market's not done anything for the past month. Gold's DP ranges are so small now that when we actually do get some volatility, it stretches itself out pretty far. The one way that you can combat this, if you want to try to get around it, is modifying, instead of using half DPs, using 1 DPs all the way out and just expanding them. So instead of going to 1800 even to 1804.6, you would go to 1809.1 and just kind of stretch things out a little bit. We have a really extended market right now, and as far as gold is concerned, we started the session off way up in the stratosphere. This is a really difficult spot for the market to want to hold, but if we're looking at the overall volume considerations, those are back down here at 1799.8. That's pretty good. And if you remember from the bigger picture on the 60-minute chart, we had that major POC rotation that the market is breaking back above. So the fact that all of this is coming to fruition right now is suggesting, at least, that the bulls are trying to get a rotation up. There's the rotation above the POC. They actually haven't even come back to the thing yet. That would have been the spot right there. Whoo, man. Now, keep in mind, don't lose sight of it. That's when you lose sight of it, that's when it goes boop. It goes all the way back down and misses you. But there's some very obvious interest down in these lows, and seeing the market continue back to the upside, if we're looking at it from a bull's case all the way across, well, we haven't pulled back to the 78s, and now in the near term, we're above the 04s. The highs are where it's going. The thing that not really concerns me, it would be concerning if I were short, is that we've got this wide open window over here. And if the market does finally decide to break through it, the last time it had any trouble inside of there was when it rallied all the way up to 65, or dropped all the way down to, the 1800s. So if this can clear back up through these highs, and we're seeing every reason to believe they can, then we should be able to see a rally at least back up to the 65s, potentially the POC that they left behind at the 95s. Gold's looking really solid, even though it's massively consolidated. Over on crude oil, speaking of consolidated, they did break a little bit further up. I mean, none of that's a surprise. We were talking about how we needed the inventories, which we were expecting to be bullish. The API told us they should be bullish. They came out bullish. We've migrated above the POC here. We're continuing back up at 71.91 with a nice conviction back above. If this does continue higher, look at the way that this is forming. I mean, this is a metric ton of sellers inside of here, and we talked about yesterday on how a lot of that is likely to get out of break even, which they did. So given that this is rolling back up and we have a POC that was left behind at 71.91, this could potentially be that midpoint that we've been talking about on a lot of these others. And again, 65.01, we've been talking about this on crude as well for a bit, but that should put objectives up towards the 80s. Still a lot of upward potential here on crude oil, and now that we're clearing above that 71.91 POC and continuing back up, that adds a lot of conviction. As far as the bulls confirmed POC, which is now confirmed with a continuation up to a new high, they have that previous POC which was left behind back here. Arguably, they already kind of used that up, but it would be nice to see if they want to get a quick little snap back to retest again. We'll widen the whole thing out. Over on the euro, finally waking up a little bit with a continuation up. We see the same thing on gold. In the same thing on gold as far as the way it's moving too. All of the movement, we're already way up in the stratosphere. It's going to have a really hard time trying to keep this thing going all the way up, you know, this far up. That requires a lot. Now, this wick back here, that was on FOMC. But remember what also was down there. This is something that we've been waiting for like a century and a half for. We had the POC finally change. Right now, I haven't looked at it since then. Euro's not really one of my big markets. But what do you want to bet that FOMC flush went back down towards a POC test? I'm just gonna guess. But yeah, okay, there we go. So the POC is at 1.18100. That's the FOMC flush right there. They re-grabbed that POC. Everybody who was short jumped ship, and they utilized news as the catalyst to get rid of a massive amount of contracts. What better way to hide your contracts than inside of news? Everybody expects volatility then anyway. So with that big dive to the downside, it liquidated a lot of the shorts if they were still short, and if they were long and looking to build in more, that was likely the last chance that they're going to have to build in before we see a residual rise to the upside. The upside objective for these traders off of that 1.18100 is going to be at the very least a 2-to-1. So the 2-to-1 hasn't quite hit yet. It's got a little ways to go. That would be up at the positive 2 DP. Jeez. Now, remember, this also opens the door for significantly larger moves, all the way up to that 1.2 that we were talking about. And if it really wants to crack up, then we've got a huge wide open door, and then there's nothing until 21,500, 22. Very interesting. And then on the other side of interesting, there's Bitcoin, which is stuck just dead flat and sideways. Hovering around the 40,000 mark, I mean, we're kind of creating this bit of wedge that's going on. An ascending wedge, which is attempting to break down. Usually, that would be a sign of failure or trapping of some sort. I don't like using the volume on Coinbase charts because I can't ever trust it, but we do have a nice little structural wedge going on. Typically, when we have an ascending wedge in a bull market, seeing it break down, you're usually going to want to see it take out some of these previous swing lows as an area of support for buyers to ping it back up. If it does want to dip a little bit lower, the major point of interest is going to be back at the 36,600s, 650s in that zone, right around the major swing. Ethereum also looking pretty solid, but a little bit more gross over the past few days, I guess. We had this ascending wedge to the upside, and the ascending wedge did break down through the lows. They trapped no previous swings. In fact, they missed all of them, and we're seeing the same thing that happened the last time we had a perpetually bullish trend on Ethereum. No swing lows. None of them. Not a single one. All the way back up. So bulls are still holding pretty strong here. Swap gears over to the daily and see what's going on. After that giant bear bar, as expected, the daily chart plots a weak bull bar, closing off of the highs and back down on itself. It's almost like we talked about that. It's almost like history told us to expect that. Weird. Whoa. So as far as the overall movement is concerned, I mean, it's doing exactly what you would expect it to do. And none of that has really changed. The big consideration here is looking for the larger pullback to 904.75 on the POC, which still has yet to happen. We don't have any POC shifts. There's no changes there. So as far as this larger move to the upside goes, if this is going to be anything other than an impulse, which at this point in time I don't think we can say it is because, well, this wave is pulled back deeper. That means that we're likely in a corrective phase, and this could very easily pull back down that far. Now, if you zoom out a little bit further, it's pretty obvious we're in a massive impulse leg to the upside, but the problem is we're on a fifth wave up. So this overextension up here is a little bit troublesome, given the fact that we've got a huge POC waiting back at the 904.75s. If we look back at the last confirmed POC off of that top, drag this a little further forward. I believe that last pullback already got that one. Close enough. They kind of missed it, but that would be the next zone of interest. If we plot another one further forward, just kind of categorizing what the market is trying to do here. They use that one over there, and that also lines up with it there. So, I mean, it still fits. A wider pullback still fits. So far, we've been just getting those typical value pullbacks on the daily, which are around 2 to 3%, give or take. As far as the 15-minute is concerned, I mean, I've got a bajillion things drawn here at the moment, but I mean, all things considered, let's just start fresh. Let's see what's going on. This big move to the downside, this big cycle, we've got to figure out, like, what the heck is this? You know, after that big giant move to the downside formed, we've got nice perpetual bullishness coming to the upside, but at the same time, let me get the clock over here so I don't lose track, we do have a wedge forming here and maybe even off of these inside highs. So we're consolidating, and it's fairly obvious consolidation, but with this consolidation, the question then is, which way are they going to go? We just saw a massive wick on the highs here on this 15-minute chart that closed out. And if we're looking at it from the bulls perspective or the bears perspective, the POC is at 15,000. That sucks. Like, really? Out of everywhere, that's going to be where they land the POC on 15,000. You know, not a big level or anything. Jeez, oh Pete. So we've got the POC sitting on 15,000, and we're consolidating smack on top of it. Wow, what an awkward place to be at the moment. I mean, all things considered here, we're obviously in a range, but which way do we give the bias? You know, I mean, given that this big flush to the downside obviously found some level of support and reversed back off of the lows, I've got to give the bias to the longs. But the thing is, if this is going to be a V-bottom, they've got to clear the high. That hasn't happened yet. We've got a lower high. And when V-bottoms fail, that lower high is usually the L4, L5. And if we measure off of the top to bottom, it's an L5, which is now holding an L4 with lower highs. This thing's got some serious problems. Like, I really want this to go up. But, I mean, right now, if I want it to go up, it's got to be buy low at the very least. And this, it's in a tough spot. Really, really awkward here. And man, that POC doesn't help at all. As far as the cycle is concerned, looking at, you know, maybe are they coming back to some previous major confirmed swings? That confirmed swing was back here. That dip a little bit further down. We haven't gotten that. So the fact that we haven't gotten that confirmed swing, it doesn't mean that it can't V-bottom and go screaming back up and finish the job. It's got to get above 15,000 for that to happen. But if we look at this from a measured move correction, let's just say that it did drop and fell all the way back down. Look at where a 1-to-1 correction lands. I mean, just saying. I mean, I want this to go up. I really do. But I can't be a buyer right now. That's tough. The buy opportunity was down here. Down here, down here, down here on these washouts. Right? Not way up here. Now we've got to wait. Hey, Ace, how's it going? Welcome, welcome. Now, as far as the impulse goes, just so that we have all of the POCs, that was a lower high, so we can get that all the way up there. There we go. Jumping into the 500 tick and seeing what's going on, or what's not going on. Market is incredibly sideways, consolidated, chopped, and slopped. There's not really anything happening. We've got higher lows off of the L5s, and we've got lower highs off of the L5s. Well, that doesn't help a whole lot. As far as this is concerned, we are obviously in a wedge, and there's not really much else going on. From the low, which did technically take place in the overnight at 9:30, we can use that from this perspective in going all the way across. We've got it at 997. Talk about a tough spot. We are smack in the middle of it. So we'll see what they're able to do, but right now it's buy low, sell high, stay the heck out of the middle, and we're still on the lower side. I mean, if you look at that, we're just stuck in middle of yesterday. Nothing's happened. Well, we'll see what they want to do. We've got the open right around the corner here in about 8 minutes. 7.5 minutes. Looking at the looking across the board, the euro continuing its drive up a little bit further. There's not really much else going on. Crude could use a bit more of a pullback if possible. Get the caffeine rolling. Here it all sits. Looking at the S&P, we've got that first volume node at 399. Where is the S&P? Inside gap up at the moment. All right, open right around the corner. All right, and here the market sits as we go into the open. There's not really a whole lot going on for now. Looking at the pre-market on the S&P to see if anything is happening there. I mean, here again, we've got this ascending wedge, which is just making things super awkward, and it's not really able to accomplish a whole lot of anything. How's that white background for you after transitioning out the off of the dark blue? We've got this nice cycle to the upside, but that's about it. I mean, as far as the cycles go, and I know I usually don't talk about this too much, the S&P is not the primary focus, but I mean, the initial drive down looks like they tried to get something going and just miserably failed. And when the market rolled back to the upside, they had this incredibly tight micro channel, like all the way up. And when we finally broke, then you've got your typical second long structure all the way back. But I mean, it's a mess up here. Really, really difficult. So it's a range. Buy low, sell high, stay the heck out of the middle, especially right now. Yikes. Pre-market, I mean, maybe we get a little bit of a slide down. Major zone of support if it is going to dip. They've already kind of demonstrated support here, but would be off of the spike and wedge in this case, low. Would be a little bit nicer to see a deeper pullback, though, gotta say. The heck? Oh, okay. All right. Hey, good morning. Yeah, it's just a gigantic triangle. This thing's... It's just hanging out. I mean, it's right in the middle, you know, and that's what makes it so incredibly awkward right now. Is it's like, okay, well, we can do what? Like, buy in the middle? Okay, 50-50, it goes up or down. You know, like, I just don't want to deal with 50-50s right now. I would rather be on the long side. But so far, it's just L5s on both ends. There's that warning. I'm going to take a screenshot before I forget. Hang on. All right. Market bouncing off of settlement again, which is just smack in the middle of it. Fantastic. Looking at the impulses, because that's really all we have to work with right now. If we dissect this a little bit further down, the impulse leg is what the market pulled back to off of 65.75. That's where all of the support showed up. Heads up, in 30 seconds, we've got 928, so that's right around the corner. The impulse leg pulled back down, met that objective, left a POC. Jeez, look at that volume. Whoa. Okay, back at 15,009, which is what the market came back and retested as resistance. If we go back from the low to the high on the impulse, we now have a POC which is up at the highs. And this isn't what we've been seeing beforehand, right? Before, we've been seeing the POC which has been down here on up moves and POCs up here on down moves. Now we have an up move and the POCs up here? Wait a minute. Something doesn't seem right. Why? Why is the POC up here? So the concern at the moment is that this move is either not done, which is definitely possible given that this is a giant wedge, and we're looking for a bit more information, or we're beginning another potential down leg, which is likely going to be an ABCD move down in a bigger perspective. It doesn't have to go very far, but that would be that trap low underneath in the 55s. This thing's just a big nasty right now. Would this look better if we do... No, I'm gonna... If I want that wedge to work... Thank you, alarm clock. I've got to draw it like this. I don't know where E's gonna end up, but at least that way we've got the wedge highlighted. I don't like that either. All right. Open right around the corner. We've got 30 seconds. POC at the moment is top weighted, which, you know, is abnormal from what we've been seeing if we're looking at this and continuing the move, because we have bottom to top. We'll go from top to where we are now, which is down at 94. Stock exchange is open. NASDAQ still hovering in the middle. The S&P opens up with a barely, but an inside gap to the upside right at the top close of yesterday, which is likely going to be seen as resistance initially. That's what they're going to have to... They're going to have to work through that at 575. We'll see what they're able to do on this first 5 minute. Nice little POC grab bag pullback there at 94. A super awkward timing. I mean, the timing right now is the only problem because we're right at the open. It's tough. A bull bar can turn into a bear bar in a nanosecond right now. Not really at the wedge, and it's forcing buyers to buy above a really strong bull bar, which is directly back into that previous POC at the 505s. This is where sellers will try to short down. I would rather try to buy lower and look for a larger rotation up, but nice continuation back to the POC. And And another little dip back down for pullback buyers to ratchet a move back up. Scalper's objective met immediately. Sorry, I had like no time to respond to that. That moved really fast. As soon as I had my risk-reward tool on the screen, it was already at the scalper's objectives. I was like, whoop, okay, time to go. Very fast move. Jeez. Still dealing with open volatility. Sliding below the POC, now acting as resistance, but down below is settlement. That's going to be a tough one. Still looking buy low, sell high. Try to stay out of the middle. I mean, I know we're in the middle right now, but it's contextually middle. Ooh, man, if the longs didn't take their profit before, it looks like they jumped ship real fast on that last bull bar. Bulls have to re-up and confirm that they're going to take this back up. And buying way up here certainly is not where I want to be buying. Nice continuation back up. They might force people to buy way up here. S&P is continuing up and now breaking above that high close zone at 06. Yeah, there may not be a pullback. I can't buy up at the top hoping it goes higher, though. If I had more contracts, maybe. But, I mean, we already hit the scalper's objective, which is all I was looking for anyway. Back up to resistance. Sellers will be selling here. I don't really have an inclination to want to short the market at the moment. We're trying to chop back above that 15,000 mark on the 15, and we're reattempting the breakout point of this consolidation. I would like to give it some time here. They still have not made a new high. Very nice bull continuation back up. Attempt. Jerking back down again. That might be enough to find sellers to pressure it back down. I really wish we weren't dealing with 15,000 right now. I'm curious, if we bring this whole thing over, it is down at 91.50. It fails right back down again. Look at these highs. 24.75, 19 quarter, 20.75. Made like, what, a 1 point new high? Strong bear bar down. Sellers will be selling below it, but that's technically not the signal bar, so it's likely to be a bit more trappy. If it goes, it's going to go without me. I can't sell way underneath there. And again, I have a hard time selling here anyway because we're above that POC on the larger 15-minute structure, which could indicate a larger continuation up. And we were talking yesterday up to like the 15,300s. So I don't really want to be short into that. I can't buy here, obviously, but... If we're looking at just today's volume and, just today's structural price action, we would have a wedge that looks a bit more like this. All right, more continuation to the upside. Good breakout above the top of the wedge. It's the first breakout of the wedge. First 5-minute bar on the S&P is in. Let's see where that first 5 POC is. 650 on the S&P. NASDAQ continuing to drive further up. Got all these old 5 minutes. Hang on. First 5-minute POC of the day is at 10, and the market is very aggressively above that at the moment. If we continue this further forward, it did finally solidify at 14. Which, wait. That would have to be the first 5. What the heck? Well, it's got to be at 14 then, right? Why didn't that show up the right way? I must have drawn it wrong. Now it's showing up the right way. Who knows? Whatever. At 14, sorry. Correction. More bullish conviction to the upside. Now, as far as this movement is concerned, we've got the L4, which climbed its way back up. I'm sorry, the L5, which climbed its way up and started holding inside the L3 and now is breaking above the top. Typically, when you have an L5 breakout, even if it is strong, the major pullback that occurs is usually going to be an L2. So it's significantly more probabilistic to be looking for an L2 pullback, which would be back at the 5-minute POC. Wow. All right, well, as this is all continuing the same move to the upside, let's just draw this further. We've got a confirmed POC now, which we can say is back at 09. And the impulse POC from the low of day this morning, after midnight, to the top is at 91.50. The larger one from the bottom is at 09. So 09 is kind of the one. Might as well just simplify and leave one instead of 3 drawings, right? More bullish conviction to the upside. Still just rip-roaring higher. Wow. All right, so we are still staying above the 15,000, and thank goodness for technical analysis, because, you know, that kept us out of all of those shorts inside here. Ay, ay, ay. I knew there was a reason we do that every morning. 15,060s now right around the corner. This bad boy is a screaming. We've got some strong first bull bars here kicking off the morning. As far as the POC is concerned, on the 5 minutes NASDAQ, as we work our way further forward, the POC did start at 14. Now it's up at 43.50. That could potentially suggest that buyers are beginning to exit their entries with targets. Seeing the POC shift up on the S&P as well. Now remember, this candle still has a minute and a half to close. So if they continuously close above this POC, then I have every reason to believe that they're still long. And we're very likely going to be creating some candle gapping on the next bar if they close way up there. Still looking all right. We're staying above the POC on the 15-minute. It's okay. A larger pullback would be okay. That's fine. God, look where we are from the bigger picture. Oh boy. This strong of a breakout may still draw the attention of L1 traders looking for continuation, but it makes a lot more sense to be hunting for that L2 right now. And 75. Ah, crap. I'm going to change it anyway. Dang it. So we'll keep an eye on where this wants to go as far as the L2 is concerned. That is going to be the ultimate pullback that we're looking for. Continuing higher, though, and working its way up to the half DP zone. Likely a first area of resistance. Nice bullish continuation. 2 very strong bull bars to the upside on the S&P. And with the S&P, we now have candle gapping to the upside, at least forming. There's still 5 minutes left on the next candle. But if it were to stay open and keep going from where it is right this second, then we've got upside potential objectives on the S&P at 24.50. Remember, that candle gapping is still forming, though. So what happens if the POC shifts up on the second ES candle? So right now we're kind of figuring out, usually within the first 15 minutes, you'll be able to figure out what the market is trying to do more often than not. And it's especially prevalent if you utilize some hindsight and go backward a bit. So if we look at like yesterday's first 15 minutes, the initial drive after the 5-minute bar, they've got a POC down here. So I utilize this first 30 minutes or so to give me a general idea of what the market's trying to do. And if we see here that the POC, after a really strong move, is down, and they were trying to defend, and all of a sudden it's above, I'm thinking those shorts are underwater and they want a GTFO out of their position, right? So that allows me to look for possible reversals or turning points later in the day. If you go back to the previous day before that, we've got another 15-minute drive to the downside, and the POC landed right here. So when the market's trying to go above it, I'm assuming that they're trying to go bullish. And if we break underneath it, I'm assuming that they're going to go bearish. And it creates really nice turning points for the kind of initial morning portion of the day. So right now, we have the POC shifting up, but the market's still above it. So still bullish as far as I'm concerned. I don't have any reason to disbelieve them yet. Although I would love a deeper pullback. Oh, man, quick. Wow, that candle showed up out of nowhere. Did you see that 5-minute bar just flash back to the POC at 11? Now shifting up to 1175. That candle showed up out of nowhere. 1675's all-time highs. Thank you, Paul. I didn't realize we were that close already. So all-time highs right around the corners. Really? Man, they did grind all the way back up there, didn't they? I guess they just got up there under my nose. They just snuck their way up. Thanks for the heads up. I appreciate it. So the S&P is getting very, very close to the all-time highs. That's going to be super awkward. Now, as with any all-time high or any major level, if they can break out above it, typically you'll see them go an extra 5-10 points above. With the NASDAQ, it's usually like 20 to 50. But if the S&P is able to crank above those highs of 16s, it wouldn't be a surprise to see it make it up to like the 20s, 21s. It'd be fair. Breaking back underneath that first 15 POC is not going to help them, though. Oh, okay, now wait a minute here, NASDAQ. That POC shifted way up here. Now, yeah, there is some candle gapping, and maybe we've got some continuation potential here, but wow. As far as the candle gapping is concerned, technically it hasn't filled any of it in. That allows upside objectives of 15,135. POC super top weighted, though. S&P pulling back down. Now, knowing that we have the all-time highs around the corner, normally I would be looking to buy it like the 975s, 950s. I'm going to offset a little bit, though, with the assumption that the all-time highs are going to create a bit of excess pressure for it to slide back. I think it makes more sense with this bear engulfing candle that they see a bit of drive down to like the 875s, maybe even the 5-minute PO or the first 5-minute volume node, just to see as a zone of support. I don't think it makes sense to buy directly under the previous candle. NASDAQ pulling back a little bit further. As far as the larger cycling goes from Elliott Wave, it would have initially, from, again, after midnight, starting from there and working their way higher. We had the first leg up, then the higher low. Initially, it would have started off something along the lines of this. But when this pullback happened, that invalidated that from happening. So we've got to widen it out a little bit. $1.5? All right. I didn't get a fill on that bear bar, and I'm not interested in them triggering a bear engulfing. That's going to be a hard pass. I wanted that to fill on this candle down for them to have time to close back up, but that's just not the case anymore. So if they are going to pull back a little bit further, realistically with a bear engulfing, I have to assume that they're going to be able to run through a little bit further. I've got to offset even more. 8, 7, 6. Makes more sense. Market's trying to get more continuation to the upside. The S&P's POC is up at 12.25. That's going to be a bit troublesome. NASDAQ continuing to the highs, and the POC, the first 15, they did close underneath it, but man, we still have a monster of a candle gap. This is a confirmed candle gap now, which means that upside objectives, unless it closes in further, sitting at 124. Did they grab an L1 there? No, they couldn't even do that. What about off of this? Got the L3. They couldn't even hit the L1 on that. Man. All right. On the S&P, doesn't look like I'm gonna get that hit, so let me drop those off. They couldn't even trigger in the bear bar, which is good. I mean, I was trying to go long after all, but it's kind of frustrating the way that it did it. Wow, immediately rejected off that POC. I don't know that I would want to go long anymore if I was still looking. That rejection back down could equal a deeper pullback down to like the 650s settlement area. See what they got in them. Sellers following through a little bit more. Looking across the field here, we've got more continuation to the upside on gold, further breaking out to the upside. The euro also following along with that. Nice jump higher on the index markets. Crypto's just kind of hanging out. Market kind of churning its way back down here. It'd be significantly more enticing to see an L2 pullback here on the bigger perspective, but it doesn't necessarily mean it has to. As far as wave completion movement goes, if we're starting off of the midnight area, we've got... I mean, maybe. I can see it. POC bottom weighting on this move down. Would still rather see an L2. On the S&P, down at the 5-minute POC makes way more sense. They're not back to an L1 on the bigger, but they are back to an L1 on the narrow, and it's to the tick. So we might have to shift to using the narrower one instead. That seems to be where the proof is coming from. S&P was able to close back above the POC. The NASDAQ still closing above their POC. Although these candles are lackluster at best. All right. We've got the shorter term POC, which is bouncing. We do know that we are hovering around the L1, so buyers are trying to get things going. Really nice bull bar continuation for a further move back to the upside. It's a little bit further away from the POC, so I would be able to do some work if it wants to dip back just a little bit. But if they are going to race away, and the one reason why I'm a bit more aggressive here is because if this is going to be a 5-wave impulse to the upside, wave 4 was incredibly messy, sloppy, and disgusting. Wave 2 was incredibly sloppy and disgusting. Meaning wave 4 is usually going to be sharp and aggressive. So there might not be a whole lot of time for pullback around this L1 if they're going to maintain this structure. Here it sits, not really doing much of anything. POC is down at 44.10 on the S&P and just hovering. Why are you putting the entry so low in the S&P? It's based on the first candle POC? Yeah, exactly. That's the first candle's POC area of interest where the market really demonstrated the beginning of this whole move. So I like that zone as an area of interest. I'm going to draw my average down just a little bit. I'm not getting the follow through that I really wanted, so I want to make sure that I get my average in a more favorable location beyond a scalper's objective. And this puts a 2-to-1 in a more favorable spot. Because remember, that L2 is still kind of looming. I know that wave 4 should be quick and decisive, but it doesn't have to be. That's not a rule. POC shifting down again on the 500 tick. And here it sits. 10 o'clock right around the corner. There is some news at 10 o'clock. I'm going to use this pop higher to jump ship. They did hit the stop area, so I will look to reduce my stop as a loss and just accept the fact that that last one doesn't want to go with me. Of course, as soon as I exit, we've got 10 o'clock news around the corner, so I don't necessarily want to re-enter into this, and it's more of a safety exit with the lack of follow-through. But, of course, as soon as I exited, it did follow through. It's just not worth the risk of letting a stop like that grow when we know a bigger L2 is a potential. Yeah, it's a big tug of war right now, which is why I really don't want to deal with the battle. You know, with news around the corner and all of this going on, if they can re-show that the Bulls want to come back in, then maybe, but the L2 is still what I'm waiting for. POC's jumping all over the place right now. More bear bars to the downside. Bull engulfing candle? Kinda, sorta. It could turn into a bear engulfing candle if it slips. Yeah, when you're around the POC, remember, you're talking about traders who are building in hundreds of, possibly even thousands of contracts. So it doesn't have to be a definitive line in the sand, and most times it's not. It's a zone. And that's what you'll see when the market is coming into that POC zone, where it kind of creates a pyramid up into it. That's because they're building on the way there. Good thing we closed out of the trade while it was small, huh? Hopefully they can get down to that L2. Beautiful momentum down. We are resting on an ABCD to the downside, which is a 1-to-1 corrective phase ahead of the L2. This is an area where buyers will start trying to buy for sure. The bigger L2 is still what's waiting. If it bounces off the L2, the initial intention of the trade would be a 2-to-1 back to the upside. Possibly even a 3-to-1. Does it fit? 3-to-1 fits. You might even be able to get away with a 4-to-1. Thank you, Adam. I appreciate it. We've got this, this ABCD down. Oh, lordy. There will be some buyers here, okay? Like, if I'm looking to build into a 50 contract position, buying 1 or 2 here isn't going to hurt my feelings. You know what I mean? That's what I'm talking about in this ABCD down. There's more potential for it to fall lower, and I would rather fill the pockets further down. But this is a zone of support, and if it's going to bounce with an aggressive market, well, it might bounce here. Depends on your risk tolerances. The POC is shifting down now, and the market is closing in a bit of this gap. This gap is still open on the NASDAQ, mind you. But if they close in this gap too far, it's going to begin to become an inside gap. Meaning, like, if it were to go to here, if it were to go to 15,030, and this were the gap that was left over, the gap objective is now inside the highs and no longer valid. Now, it's not to say that the market won't go up and find resistance there. In fact, it probably will. But it's no longer a candle gap in terms of a long-term higher high objective. It's a different beast. Right now, that's not the case. But yeah, I mean, I tried to grab the long. I tried to pick it up. I even scalped out of the initial portion. We knew something was wrong. We were sniffing it out right from the get-go. I was exiting the majority of the position before it had a chance. It's just something's not right. This isn't the bounce. Come on, L2. I know it's still a little ways down there. You can see this volume building up on this measured move. Got 10 o'clock news right around the corner. Be very clear. Keep your eyes open. 10 o'clock can get things bumping. Wow, that is a heck of a bull bar. Holy crap. Quick snap to the upside on the news going into 10 o'clock. The L2 is still what the objective is. Some scalpers may be looking to buy below that previous bull bar, but we just shifted a POC and are rejecting back down. This might be gearing up for a third leg lower. And that would line up perfectly with that L2. Twin reversal, bull bar into bear bar transition with a POC hovering back. More continuation down, retesting this measured move zone. Notice the support that's coming out of here. They're re-upping just a bit, but they know down here is where it's at. All right, we're starting to get a nice little dip down into this area, and I will utilize this to scalp out of some of them. We're not quite back to the L2, but I already know they're building into this area. I've got to expect it. So we might as well play a little bit of ball up here. I couldn't get a frickin' fill. Are you kidding me? Golly gee willikers, Batman. Jeez, I hit the ass twice, couldn't get a fill. I kind of E-exited out of that last portion there, but still waiting for the deeper pullback to L2. Nice little scalp plays inside of these washouts, though. Nice little dive back down for traders to re-up back into it. Scalp out again. I'll just keep playing these little micro ranges. That's totally fine with me. We know the L2 is what they're waiting for, but we can see the buyers. Man, they're piecing themselves into this thing. POC still hovering up in the 62 quarters. Still hovering. Going into the 10 o'clock area. I know we're right at that drop dead time. Feel free to get those questions in. We'll transition over to the extended session. It's just we're really, really close to this area. Beautiful, quick little dip. This one feels different, though. I'm going to jump ship on that one. I don't like that. This looks more like they're ready to get down to that L2. I tried grabbing it as a washout, but that bounce back was not very fast. There we go. Nice dive down into the L2. This is where buyers are going to be looking for that transitional bounce back up. First scalpers' objectives are out, but I am looking for this to turn into potentially quite a bit more. We've got that nice little ping off of it. Why is my... Oh, that's right. I switched it to 3-1. Whoops. Let me get that target in there. Nice bullish conviction off the L2. Notice the S&P still closing above their PLC. Man, they're really trying, huh? Wow. That thing closes as a bull bar, and this thing could go crazy. Come on, NASDAQ, get a pop. No POC shift, no weirdness going on there. If we look at the NASDAQ, we are underneath their POC, and the market is attempting to dive down off the 62 quarter POC from there. From that perspective, we are still closing in the gap, and now we're creating a situation that could be a negative gap. But the downside objectives for 2-to-1s, if they are in from there, are down at L2. Man. I couldn't get a fill on that little bit of a dip. Nice little flush back down to the L2 zone. Beautiful snap back up. Let's see if they can follow it through with a bit more conviction this time around. Very nice drive. Top asked, couldn't get filled. Couldn't get filled again? Really? Oh, what the hell was that? So I got a terrible fill on that. I hit the ask when it was way up at the top and it filled me at the bottom. Oh, that sucks. All right. Well, sorry, I wasn't expecting that. I hit ask when it was at like a positive 18 and I got filled at like a positive 6. Hey, wait a minute. Okay. Well. Still hovering. All right, we got 10 o'clock. We're still waiting for this one to play out. If they want to jump back to the upside, if they want to jump back to the upside, then we've got our targets up there. Let's transition over to the extended session, though. I'm not seeing any other questions come in. We're just playing off of the L2 continuation, off of an L5 dip at the lows. Pretty straightforward stuff, but we'll see if they want to keep going or what they want to do here. Nice scalpable opportunities inside this gross little range-bound stuff. It's just a matter of waiting for the bigger bounce and when they want to show up. So, as it stands, we'll let this one kind of do its thing while we transition over into the extended session. If I missed any questions, though, feel free to shoot me an email, jhb@ssftg.com, or drop those comments in, and we can get those covered for you from there, too. One way or another, though, make sure that you get those in, and we'll get you covered from there. For the rest of you, though, hang out for a second, and we'll transition over to the extended session. Yeah. All right. Have a good one. We'll talk to y'all later. Thanks. Bye.
Do you have another?